I'm Charlotte Morris. I'm a partner on the investment team at Pantheon and have been with the firm for 18 years. I'm co-lead manager for Pantheon International, the FTSE 250 listed investment trust that Pantheon manages. Pantheon International invests in private equity on a global basis. In other words, it invests in private companies, so they're not available on the public markets, which are often in niche growth sectors. Our aim is to maximize capital growth over the long term. So the company has achieved about 12% growth in its net asset value per annum since it was launched in 1987. That performance is net of fees. Now, for retail investors, private equity can be quite difficult to access. But given its listed structure, where Pantheon International shares are traded on the London Stock Exchange, anyone can gain access to a high-quality private equity portfolio through a company like Pantheon International. Pantheon International invests with many of the best private equity managers in the world. As I mentioned in my introduction, Pantheon International itself is managed by Pantheon. And over more than 40 years of investing in private equity, Pantheon has developed and cultivated relationships with those top private equity managers globally. The access that Pantheon provides to those groups is essential for Pantheon International's success. So Pantheon International either invests directly into companies alongside our favourite managers, or it invests into companies via funds that are being raised by those managers for the first time. We have a large team of investment professionals located around the world, about 130 investment professionals globally. So we have people on the ground to ensure that Pantheon International gets access to the exciting deal flow that we see coming from our private equity managers. More than half of Pantheon International portfolio is invested directly into companies. So that means that each opportunity goes through what we call a double quality filter. Now that means that both the private equity manager and the company itself must pass our stringent due diligence processes. And finally, Pantheon International invests directly into the deals sourced for it by Pantheon, which means that we have full control over what goes into the portfolio and can tilt it toward where we see the best opportunities at the time. More than 70% of the portfolio is invested in what are known as buyouts. So these are well-established companies, but they still have room for growth. The private equity manager has full control over those businesses, and they work with company management to implement operational improvements. They're also able to work closely with companies to navigate more difficult times, such as we've seen recently, as many economies around the world have been impacted by geopolitical tensions and macroeconomic events. The two largest sectors in Pantheon International's portfolio are information technology and healthcare. Now, these are resilient sectors that are benefiting from long-term trends that we think are here to stay. In IT, for example, digitalization and automation are key themes. The kinds of companies that we're investing in are SaaS businesses, so subscription software, which companies, their customers need to function. So we're talking about things like HR software, payroll and accounting software, or cybersecurity software. Within healthcare, we're investing behind themes such as aging demographics and the need for better healthcare products and services around the world. So, for example, there we've invested in eye care clinics and companies offering diagnostic services. So the private equity managers work with those businesses to help them grow, and then typically they sell them on to trade buyers. Very few of the companies in Pantheon International's portfolio end up on the quoted markets. Again, this supports the point that I made earlier about private equity giving access to private companies that might not otherwise be freely available for individual investors via public markets. So I've highlighted the two main sectors there. Pantheon International, though, actually invests in a range of sectors, but our ethos is always to concentrate on companies that are defensive and offer good growth potential over the long term. We've been really busy over the last year to 18 months with a number of corporate actions. We completed a £200 million share buyback programme. So this allowed Pantheon International to buy its own shares at scale while they were trading at a significant discount to NAV. We know the portfolio really well and the quality of the companies in it. So we were able to capture value for our shareholders. It also allowed us to refresh the share register at that time. We then announced a really clear, easy to understand capital allocation policy, which set out how Pantheon International would use a portion of its future cash flows to buy back its shares, depending on the level of discount on the shares at the time. And that policy has been in place since the beginning of June this year. We also put refinancing measures in place, which further strengthened the company's balance sheet. And then in terms of ongoing areas of focus, we're also underway with significantly enhancing our marketing efforts to try and stimulate new demand for Pantheon International shares. So it's been a really busy year in terms of those activities. At the same time, we have continued to scour the market for exciting new investment opportunities that we've taken advantage of alongside those share buybacks. Well, history has shown that private equity can outperform the public markets over the long term, regardless of whether we're in good times or in more challenging times. And that's because, as I said before, the private equity managers actively manage their companies. They're also flexible, so they're able to work with the company management to respond to and often actually take advantage of market conditions. Private equity managers aren't forced sellers. They can wait until the time is right to get the price that they think is appropriate for their portfolio companies. And although the M&A market has been a bit more subdued recently, there are some early signs that things might be starting to pick up as more certainty returns to the broader kind of macro environment. Pantheon International has a well-diversified portfolio that has been managed successfully by us for more than 37 years through various different economic cycles. And the numbers really speak for themselves. 84% of the company's buyout and growth company investments are profitable. In fact, if we look back over the last 10 years, 98% of Pantheon International's entire portfolio has made a return. So it's a really steady, all-weather portfolio that's being actively managed by a global manager with decades of experience.